Hey guys, this is pt.2 and STOs, and we are back with another video. Um, Make sure you guys, like I said, always like, share, subscribe, and comment down below with anything that I can help you with. If you need help, I'll try my best to help you as much as I can, and I'll try my best to lead you in the right direction with the current knowledge, market noted no knowledge that I have at this point. So, with that being said, let's continue the last video. This is part 2 on the formula to calculating risk with Vol75. So like we were saying, um, I expected price to move for a dollar amount on this score sheet right here, as far as the, so to speak, price for volatility 75, or the asset price here in volatility 75, which at this rate, when I invested, it was 3902866. And so in the last video, what happened and why we had that blind zone, um, is when we went from 3902866 to 48354. I'm like, dude, this doesn't move dollar for dollar. So what's going on? I'm seeing all this, need for conversions and the need to be able to understand really quickly um, how I was off of center, and how my emotions had got rocked because I did not kind of understand why the price went up $1,000, but I didn't make $1,000, and I'm trading stocks. So I'm thinking, here we go again. I'm about to lose again. But I went, then started research and went and looked it up. Guys, definitely, like I said, make sure you like, share, subscribe. Make sure you hit me on my socials, and you are up to date with everything that I post. I usually post things for you guys and me, because I know this is a deeper than just trading thing. It's life, socioeconomics. Want to make sure that you're up to date, you're on time, you're healthy, and you're on schedule with the potential energy that you need to be able to instill in your life, to be able to realize change, and to be able to understand that change, and and um, and properly process that change in your mind under the stress that you are under. And that's a big thing. I made another video about that too. The potential energy in your life uh, that you have to instill in order to realize change requires great, and like I said in the other video, it requires great mental energy, mental cadence, mental cognition, and all of these things that kind of give you this, mental edge to be able to kind of focus, be able to see a picture coming into your life, and to be able to kind of accept that picture, be happy about it, and further confirm, as much as you need, as much information as you need to be able to tell yourself that it's okay to need to see the picture. It's okay to need reality to confirm what it is that you're saying, because you do have a set of eyes. If you have something in front of you and you know it to be reality, but you can't see it, that'd be a problem, especially if you're somebody who likes confirmation, especially if you're an intelligent individual, because hey, you're gonna want to do the right thing. You're gonna wait until you have the answers to call yourself successful, because you can't be successful without the answers, and you can't invest without the answers either. So let's get back into this price thing, and this is the formula. I'm gonna call this video on the last video. This is the formula for volatility 75. You're literally gonna see me try to make this up uh, quite fresh, because I was needing to do it anyway. And you can see this market here. Want to check on it. This is taking off, guys, and it's literally nearing the take profit. You guys can see how much profit, and that's more than the last video. So I just want to understand, and for myself, and for the channel to be able, like I said, to fully understand what it is that I'm doing, to call myself an investor, to call myself a um, an, a literate financial decision maker. I have to know what it is that I'm putting my money into, and I want to know why I should trust it. I want to know, why shouldn't I trust it? I want to know, what it is that I look for in the market, and I want to know, why I should or shouldn't trust it, and I want to be comfortable with my trades as well. So as this kind of breaks out from this supply zone, from these levels 2019, uh, uh, and we continue to realize this as being the truth, and we confirm this as being the truth, we're going to get on here and make the formula. So the formula on here, let's go. Okay. And so the formula would be, okay, it would look something like this. Count value would be at $100, and you are trading, let's see, a micro lot, not a nano lot, but a micro lot. Let's make sure that this looks right. A micro lot is 0.01, 0.010, right? Is 0.010. Okay. And so on MetaTrader, it looks like this 0.010. That's a micro lot. That's how much I trade. Um, and for me, that's kind of an acceptable rate, as far as kind of being realistic and not having my multiplier up too high, because I just, I like to trade dollar for dollar. I don't want to get in a trading account and be scalping. I'm not the type of guy to, like, you know, as far as right now, I'm not the type of guy to be calculating, you know, um uh $2 per cent. You know what I mean? You guys know what I mean. With trading, I'm not gonna be paying $2 per cent move, or $2 per uh tick, even $20 per tick. You know what I mean? I'm not gonna be doing that, because I've seen people sometimes they're paying like 50 cents per tick, or $1.25 per tick, $10 per tick, and that is just crazy. And I don't trade like that at the moment. And I would just say, per dollar, I would like to keep it fair, in my account, unless, like I said, my account is, $100,000, and trading 3% of that, or trading a percentage of that, allows me to accept, risk high enough to pay 20 cents per tick, or even 15 cents per tick. You know, then hey, I'll calculate it like that. But as of right now, I am comfortable with paying like 1 cent per tick, 2 cents per tick. That's fine. So anywho, let's go and complete this formula. So we have it, and we complete the purpose of this video. So say account value is $100. You're trading a quantity of one micro lot, and so per, and I would recommend, if you're if you're an investor, or you want to trade stock, kind of, look up, do the math. Like I said, I'm doing the formula for you right now. Um, but I'm also doing the formula for myself. So this is kind of how I see it, and this is just where I kind of need to to be able to understand the market and understand what it means to kind of be profitable for me. And this is just what I'm willing to pay, so to speak, for each share, based on the amount of money that I have and based on the rate of change that I want to see in my account per tick, or percentage change in the market trading assets. Because if the market moves 1 cent and I'm down $100 already, that's ridiculous. Because the goal of this, how I like to trade, is you want to be able to turn, $7 into 100. You want to be able to turn $10 into maybe 100, $200 over time. You see, and that right there is so powerful and so effective. And you'll begin feeling that once you begin gaining confidence with yourself as an investor, and you become confident in how contracting works in business, and how being loyal in business pays off. You will understand that building capital with little bits of capital is a style, and investors like that. And if you can take $7 and perfectly calculate the rate of change at which your risk will be risked, and you can calculate the um, amount of change that your money will fluctuate within the move that you expect, and you gain consistency with judging the right time to invest, then you have perfectly calculated uh, a investment in the market, and you have also factored in the rate of change in which your investment account will be affected by in the market. So that means that you will understand it at a fractional rate, even to even say, if you like, let's say if you're paying like I said, maybe 2 cents, 3 cents, 4 cents per tick, or per percentage change in the market, which are probably around like 0.005 or something like that, if it's like a cent, Dow Jones or something like that. um and you understand on a 5 minute time frame that if it moves 2 ticks down, that my trading account is going to only move 5 cents, and I have 10 cents in my account. But if it moves 100 ticks or 1,000 ticks in my direction over time, I'll have I'll take that 10-cent risk off of that 1 tick move against me, or in the market fluctuation. um and once it goes in your direction for a long time, over the weekend or over the month, over the course of the rest of the year, even sometimes, if you're willing to hold it for that long, um you will have $100. That is roughly 1,000% on your account, but you only risked like maybe like 20, 30, maybe 15% of your account, because you have a small dollar amount in your account. But it was calculated and it was expected, right? So you gotta definitely be able to do that. Like I said, I like to kind of be able to do that and understand it on a kind of contracting basis. Kind of understand it, what it is. IPO, it's IPO. It's a projection, it's a product. So you have to understand, like I said, professionally, what business is for, and how you want to kind of position yourself in these business deals and in the market as an investor, trading stock or investing in any type of asset. It's an asset for a reason. It's because it pays you money, and you believe that the value of it will change, and you believe that people agreed on a price, and you agree that the market should hold up. Have you had a reasonable and fair and honest businessman? Then you can expect what that means for you becoming an investor in the market once you're able to kind of calculate your risk and kind of care about it to even a fractional uh, breakdown of price when you become the trader that you want to be. And when you have been through the intraday fails and the intraday projections and scalping and all of that, and you'll appreciate what I'm saying. Once you go through this, you got to go through it, you got to understand, you got to see the fails, you got to watch it, you got to you know not assume like you have to know like it's on a contract basis. Like that is how you deal with assets. So you got a quantity of 110 micro lot, $100 account. 9 times out of 10, here my setup is buy low, sell high. Because you buy low, sell high, you're selling a product, IPO. The situation here would be, let's just say, like we have right now, SanDisk. SanDisk price projections, I think it was like until like July or something like that. Price projections were up, to like $2,100 per share. And um SanDisk is currently like around like $1,200 per share. And you guys can see that is almost 100% return on your investment. You double your account, which means that there is money in there to be made per share. There's money in there that has been contracted. There is money in there that they are understanding that they are a valuable company. They have customers. They have people that believe in their product. I believe in SanDisk. I have a SanDisk on my neck right now. And I've never had a problem with it. I've never had a SanDisk that failed. I've never had a SanDisk that broke. I've never had a SanDisk that I did not like. So if they made a freaking new SanDisk with a little flashlight on it just to show them I'm a loyal customer, guess what? I'm gonna buy into it. And guess what that means, guys? If they IPO the product at 1200 and I can get in at a fractional price of that, as of right now, guess what? I'm gonna do that because I trust the company. I know it's gonna go up, and if it goes up and they're offering at a fractional price, and I get in, and yes, I'm at a fractional price. Me, as an investor, not the company owner, but an investor, I'm at a fractional price, but they're in offering the product at 1200 per share, or even fractionally these other instruments that kind of accumulate their business credit or their business value at $1,200 per share of this company, per percentage of this company, meaning debt or all their assets, things like that, what they are worth. And like I said, if it's going up, if the name has a reputable name in the business, it's going to go up. People are going to buy their product. Like I said, I would buy SanDisk just to buy it against people who didn't like SanDisk. I'm gonna have to end this video because it's about to end. But guys, like I said, I'm about to continue this video. I guess it's gonna be a 3-part video. So definitely catch me in the next video, guys. Thank you for watching so much. I'll see you in the next video.